Mastering Candlestick Patterns, predict market moves like a pro. What's up everybody? It's Shiraz. You clicked on this video because you want to make smarter trades, right? And guess what? You're in the right place. Today, we're diving deep into the world of candlestick patterns. These patterns are like cheat codes for reading the market. Once you learn how to spot them, you'll start to see potential buy and sell signals everywhere you look. So whether you're new to trading or a seasoned pro, this video is going to give you the edge you need to level up your trading game. Let's do this. Bullish engulfing, spot this, buy that. Alright, let's kick things off with the bullish engulfing pattern. This one's a personal favorite because it's pretty easy to spot and can signal a big move upwards. Imagine this. You see a red candle showing the price going down, right? But then, bam! The next candle is green and it completely swallows the red candle. That, my friends, is a bullish engulfing pattern. Why is it important? Well, it shows that the buyers have taken control and the price is likely to keep climbing. It's like a giant green sign screaming, "Buy now!" Hammer time. When a downward trend gets hammered. Now, let's talk about the hammer pattern. This one's all about finding a potential reversal when the market's looking down. Picture this. You've got a stock that's been dropping like it's hot. Red candles everywhere, right? But then, boom, a hammer! This candle has a tiny body at the top and this long wick at the bottom. It's like the price tried to keep falling, but the buyers stepped in and said, "Nope, not today." That long wick? That's the buyers showing their strength. Keep an eye out for this one after a downtrend. It could be your ticket to some serious profits. Morning Star, a new dawn for your portfolio. Next up, we've got the Morning Star pattern, and this one's all about hope after a long downtrend. Imagine this. You're looking at a chart, and it's just been a sea of red. But then, a glimmer of hope. The Morning Star pattern emerges, signaling a potential shift in momentum. First, you've got that long red candle, showing the bears in control. Then, a small-bodied candle, showing indecision. But finally, a strong green candle emerges, closing well above the previous day's close. That's the bulls making their comeback. This pattern tells us that the selling pressure is weakening and the buyers might be ready to take over. Remember, it's called the Morning Star for a reason. It signals a new dawn for the asset's price. Chapter 4, Piercing Line, Piercing Through the Bearish Pressure. Now let's talk about the piercing line pattern, another bullish signal that you definitely don't want to miss. This pattern emerges after a downtrend, and just like the name suggests, it shows the bulls piercing through the bearish pressure. Here's how it looks. You've got a bearish candle followed by a bullish candle that opens lower than the previous close but then rallies strong, closing well above the midpoint of the previous candle. This strong upward movement shows that the buyers are stepping in with force, potentially signaling a reversal of the downtrend. It's like the bulls are saying, "We're back, and we're here to stay." Chapter 5, 3 White Soldiers, Marching Your Portfolio to Profits. Let's talk about the 3 White Soldiers pattern. This one's a powerful bullish signal that can really get your portfolio marching upwards. Imagine this. You're looking at a chart and you see 3 consecutive long green candles, each with a higher close than the previous one. That's the 3 White Soldiers in action. This pattern indicates strong buying pressure and suggests that the uptrend is likely to continue. It's like the bulls are on a roll, and they're not slowing down for anyone. Just remember, the candles should have small wicks, showing that the buyers are in control from the opening bell to the closing bell. Chapter 6. Bearish engulfing, don't get caught sleeping on this pattern. Alright, we've covered some bullish patterns, but now it's time to talk about the bears. First up, the bearish engulfing pattern. Remember the bullish engulfing? Well, this is its evil twin. Instead of a green candle engulfing a red one, we have a big bad red candle swallowing up a small green one. This tells you the sellers are in control, and the price is likely to drop. It's like a warning sign flashing, "Exit, exit, exit." Chapter 7, Shooting Star. That upward trend, it's about to crash. Next up, we've got the shooting star. This single candle pattern can be a strong indication that an uptrend is about to come to a screeching halt. Here's the picture. You've got a stock that's been on a tear, green candles everywhere. But then you see it, a shooting star. This candle has a small body at the bottom and a long wick at the top. It's like the price tried to rocket higher, but then the sellers came in and slammed it right back down. That long upper wick, that's the sellers flexing their muscles. Chapter 8. Now let's talk about the evening star pattern. This 3-candle pattern is basically the bearish counterpart to the morning star. Instead of signaling a potential bullish reversal, it suggests that the party's over for the uptrend. Here's what to look for. You've got a long green candle showing the bulls in control, then a small-bodied candle signaling some indecision. But then, bam! A long red candle emerges, closing well below the midpoint of the first candle. This is the bears making their presence known, and it's often a sign that a downtrend is on the horizon. Chapter 9. Alright, let's discuss the doji. This single candle pattern is like the market hitting the pause button. It's a sign of indecision, and it can be either bullish or bearish depending on the context. With the doji, the opening and closing prices are practically the same, creating a small body, sometimes even just a line, with wicks extending above and below. Now here's the key. The length and direction of the wicks can give you clues about the balance between buyers and sellers. A long upper wick suggests buying pressure, while a long lower wick suggests selling pressure. Chapter 10. Finally, let's talk about flags and pennants. These continuation patterns can be your ticket to riding a trend for some serious profits. Imagine this. You've got a stock that's been moving sharply upwards or downwards. Then it takes a little breather, forming a small, tight consolidation pattern. That's your flag or pennant. A flag looks like a little rectangle or parallelogram, while a pennant forms a small, symmetrical triangle. These patterns usually form on lighter volume, indicating a pause in the action before the trend resumes. Outro. So there you have it, a crash course in candlestick patterns. Now before you rush off and start trading like a Wall Street wizard, remember that context is key. These patterns are most effective when you combine them with other technical indicators and consider the overall market conditions. Don't just rely on one pattern alone, look for confirmation from other signals, and as always, never invest more than you can afford to lose.